Hi everyone, good morning and welcome back to Grade B. So today we are going to start the costing MCQs. We have picked up few of the MCQs. We do think that these MCQs are very important for all the kinds of examinations that have been mentioned, right? For all kinds of competitive examination. And in the today's class, I will be focusing more on to the conceptual questions, right? And in the upcoming class we will be focusing few of the advanced level questions. Fine, so both kinds of questions will be covered on the basis of conceptual. What kind of conceptual questions you can see? Yeah, I also understand that. Yes, this is an important session and let's just have an understanding and develop an understanding. See, we are not saying that okay, you might find only these kind of questions in your examination. So which topics to skip? I am not going to suggest you any topic to skip because sometimes they also ask the questions from the financial management in the costing section, right? So there are topics like of financial management that have been asked in the costing. I'll not say that you should skip some topic, but whereas I'll say that have some understanding about each and every topic. Don't go into that much depth. Only some amount of time is needed to understand the costing concepts, and once you are through that, don't go into that much detail. Just cover the, what you can say, the surface of the topic. That's it. Don't go into depth, but please do not skip any particular topic because that is surely I am not advising you that. Fine. Now let's come back to the topic, and we'll be covering the MCQs of the costing, but today I'll be covering more of the conceptual questions. Yes, we should, but in even in numericals, I will lean more over to the conceptual numericals. Fine. Conceptual numericals, I have included one or two numericals, you will see. I have included some of the conceptual questions, and apart from that, such kind of questions, the answer of that can be found out in 2 minutes, right? Costing questions can be lengthy. Obviously, they are lengthy. Costing is a lengthy subject, but we do not have to take out everything. Okay? I hope that solves the problem. Just be with me, solve these questions with me, and you will have some understanding. And by the time, I would like that all of you, please, whenever I am asking a question, please apply your mind and try to answer it before I am answering you, because that is how we will be able to develop an understanding. Okay. So question number 1 that I have is very easy question. It's fine. We'll discuss step by step. When I'll be discussing the questions, I'll discuss that what should be taken care into. Now, break-even point. This is the concept which we should be aware of. Fine. Very important concept. Obviously. See over here, break-even point can be reduced by increasing selling price per unit, reducing the variable cost, reducing fixed cost, increasing sales quantity, all of the above. Now, can you answer the question for me? Other people, I want answers from you guys as well. This answer is not there. I am asking you to answer in any one of it. Good. So the answer is all of the above. Now, why the answer is all of the above? Now see over here, what does break-even point means? Break-even point means the situation of no profit, no loss, right? It is a situation of no profit, no loss, where you want to see that whether your business is able to cover your profits or not. It can be found out in two ways, in the quantity and in value. So when I want to find out that what is my break-even point in terms of quantity, I am going to apply the formula fixed cost. What are the fixed cost of my business? Divided by the contribution per unit. And when I want to find out that in value, what is my break-even point at that particular time, I am going to apply the formula fixed cost divided by PV ratio. Is it clear? Question is, break-even point can be reduced by which of the following? This is the question. Okay. Now you see over here, what are the items that I have? What are the determinants of break-even point? Fixed cost, contribution. Fine. Now obviously if I am going to reduce my fixed cost, then my break-even point is going to be reduced. At the same time, if I am going to reduce the variable cost, will it have an impact on contribution? Quickly tell me. Do you guys know that how do we calculate contribution? I hope that you must be knowing it. Contribution is sales less variable cost. Correct? This is my contribution. Now one by one I am going to see all the options. Increasing selling price. If my selling price is going to be increased, then my sales is going to be increased, right? If my sales will be increasing, my break-even point will be reduced. Fine. Reducing the variable cost. If my variable cost is going to be reduced, my contribution will be increasing. Suppose if it was earlier 10 minus 7, now it is 10 minus 6. So earlier the contribution was 3, now the contribution was 4. If something is increasing in the denominator, so obviously break-even point is going to be reduced. And sales quantity, if your sales quantity is increasing, then again you will having an impact on contribution. Fine. So with this way, in all the ways, your break-even point is going to be reduced. Although this is an important discussion. Fine. Yes, correct. So these are all the cases because of which break-even point can be reduced. Now the next question that we have, when there are no opening or no closing stocks. Please see the question carefully. When there are no opening or closing stock, profits under marginal costing will be. Now these are conceptual questions. These are not direct. Fine. They are checking how much do you know about marginal costing. So they are asking you a plain basic question that if there are no opening or closing stocks, then profit under marginal costing will be greater than in absorption costing, less than in absorption costing, equal to absorption costing, or depending on certain factors, and stock does not have any impact on profit calculation. Others, what are your answers? Okay, good, Srinivas. It is the correct answer. It will be equal to absorption costing. Now, for those who do not understand what it is all about, let me give you a clarification over here. See, we have two kinds of costing: marginal costing and absorption costing. Now, one more thing. In every kind of costing, what we are basically doing, we are finding out that what are the total cost we have incurred. Fine. Our aim in any kind of costing is to find out the total cost that we are incurring. But the ways can be different. Like in marginal costing and absorption costing, ways can be different. Now, how this is different? Let's just see this. In marginal costing, I cannot build up the total format over here, but I'll just, for your understanding. First of all, we take variable cost. All the kinds of variable cost are written. After that, stock is valued. Fine. Stock is valued on the basis of variable cost only. Suppose I will say that yes, for producing 1000 units in this month, I have incurred 10 lakh rupees of variable cost. I repeat myself, for producing 1000 units of my production, I have incurred 10 lakh rupees of variable cost. So if I have in my stock just 100 units left, then what will be the valuation of 100 units? 10 lakh divided by 1000, that is my total production, multiplied by 100 units. This is my stock. Understanding my point? So this is how valuation of stock is done in the marginal costing. And after that, all the fixed costs will be taken care of. This is the marginal costing procedure. I'll tell you. Next is absorption costing. Under absorption costing, what we are doing? So in absorption costing, we take whether it is your variable cost or your fixed cost, because we decide the production, or the costing format is decided as what are the total expenses incurred at production level, what are the total expenses incurred at administration level, what are the total expenses incurred in selling and distribution, right? So the format is different, and in absorption costing, your stock is valued. Both kinds of costs are taken. Fixed costs are also taken and variable costs are also taken for the valuation of stock. So this is why the difference arises in both kinds of valuation. Fine. So this is the difference between marginal and absorption costing. Now coming to your question. Variable cost is, you just take an example of anything. Suppose you are doing you are manufacturing biscuits, right? You are manufacturing biscuits. Now the machinery that you are using for the production, its depreciation is a fixed item. It is not changing. The building in which you are doing production, the rent of that building is a fixed cost. Fine. This is not changing month on month. Whereas the raw material that you are going to use in the production of biscuits is a variable item. If I am here manufacturing 1000 packets of biscuits, then I might need 10 tons of maida, right? And if I am manufacturing 2000 packets of biscuit, that I might need 20 tons of maida. So the cost is going to vary, the total cost. Fine. Now next, see, we have done the question number 2. Question number 3 is a budget that gives summary of all the functional budgets and projected profit and loss account is. A budget which gives summary of all functional budgets and projected profit and loss account is known as. We have 5 options in front of us: master budget, flexible budget, performance budget, discretionary budget, and zero based budget. Yes, right. Now see, give me the answer for question number 3. What do you think? Which kind of budget we are talking about? So understand this. What are functional budgets? Whenever we are preparing budgeting means what is going to be our expenses in the coming month or in the coming year. Every corporate, like in reality, every corporate, suppose I'll tell you the actual corporate experience. Every corporate makes the budget makes the plan, they call it plan, from the April to March period. They start making it by the end of December only. And while preparing this plan and budget, they take the expenses of every department. Fine. They'll ask the purchase department that what is your plan for the year. They'll ask production department that please give your plans for the year. Likewise, finance department, marketing department, everyone is going to provide their budgets. So the budget which is representing any particular function, it is called as a functional budget. For example, we have sales budget, production budget, we have labor related, direct labor related budget, we have material budget, etc., etc. But all these budgets are included in the master budget. Fine. All these budgets are included in master budget. And when we prepare, suppose I have taken all the expenses that are going to be incurred by the different departments. अब total cost तो है मेरे पास, I have total cost, and I'll just add my revenue expectations to it. That okay, what I am expecting that the next year how much sales I am going to do. And when as soon as I add it, sales minus cost gives me an estimated profit figure which I am looking forward to achieve in the upcoming year or in upcoming period, right? So this is what it is called as the master budget. Do you guys know about zero based budget? What is zero based budget? What is zero based budget? If anyone knows about it, please tell me, although we are going to take a question onto it later on. Now next question is the difference in total cost. The difference in total cost that results from two alternative courses of action is called as relevant cost, opportunity cost, differential cost, marginal cost, or shutdown cost. Now, anyone else who would like to try over here? What is the correct answer for this? Okay. Yes. So C is the correct answer. Fine. Now please don't go for difference, differential. Fine. I'll tell you an example. Suppose right now you are making a product in your factory. You are currently producing it. Or let's take it vice versa. There is a product A. Right now you are purchasing it from the market. You are purchasing it from the market, and right now it is costing you 5 rupees per unit. Whereas you can also produce this. You can also produce this, and in that case it is going to cost you 4 rupees. So the difference is my profit, right? Difference is my gain, which I do not have to pay to someone else. So differential costs, these are the differential gains, differential losses, differential profits that you can say. Now the point over here is, it means that whenever you are comparing two alternate actions, whether to purchase it from outside or to produce it by your own, these are two decisions that you have to take. Now, the difference of cost between these two decisions is caused as the differential cost. Fine. It might give you a differential profit. It might give you a differential loss. Okay. So we write, okay, the difference in both these options, the sales is this, cost is this, finally the profit is this. So the difference between the two options is called as the differential cost. I'll tell you the other points also. Opportunity cost. What is opportunity cost? Opportunity cost का मतलब होता है the cost of next best alternative foregone. I repeat, opportunity cost is the cost of next best alternative foregone. Suppose, yes, you can take that example. Now suppose I have purchased this pen for 1000 rupees from a certain supplier, right? I could have purchased this pen for 1050 rupees from another supplier, right? And one other supplier is giving me it for 950 rupees. So the original cost of this pen is, for what I have purchased it, 1000 rupees. But the next best alternative was purchasing it for 950 rupees. So that is also, this will be called as the opportunity cost. No, it is not same as opportunity cost. Opportunity cost is different, just now how I have explained you. Shutdown cost, I hope you are aware. Relevant cost is, suppose I am purchasing a machinery. Fine. I am purchasing a machinery. I am installing that particular machinery into my premises. Fine. Now, what kind of expenses I am going to consider about that particular machinery? Till the time machinery is not installed and it is not ready to use, all the expenses will get added in the cost of machinery, like purchase price, installation price, right? Any interest that I have paid on the financing, any labor related expenses, all such will be added. Understood my point? So these are all the relevant costs. I purchased a machinery. Now the expenses which are related to that machinery will be called as a relevant cost. Now consider an expense. Fine. There is a labor and he has met, not a labor, but there is an officer and he has met with an accident on the road. So company has to pay him the compensation. Company has to pay him the compensation. Now tell me, the compensation paid to the officer and machinery related cost, they are not relevant. Fine. The compensation which has been paid to the officer is a totally different thing. If you have doubts, any kind of doubts, you see, wait, this is not there, but there is a helpline number of ours. You can go and check it out. Fine. No, there is we have an official number. You can call on to that. That is a helpline number. There is a person who is there to assist you in kinds of any doubts, right? And if you got any kind of doubt, you can write down to our email ID, and I do not have an Instagram handle. So thank you. See over here, differential cost. I have told you marginal cost, I have told you shutdown cost, everything you know about it. Relevant cost, yes. The officer's compensation related cost is not relevant in the finding out the total cost of machinery. Okay. Now see over here, next question that we have. The difference between hours paid and hours worked is known as. Now this question comes straight from the standard costing. Fine. Now some people, they have standard costing is a typical, not very typical, but yes, it is a lengthy concept which needs to be understood. Now what is important in standard costing? It's formulas. Very important. I have included at least 2-3 questions from the standard costing and all are based on the formulas. So there can be a straight question out of it, right? There can be a straight question out of this. Now tell me, what is the difference between hours paid and hours worked is called as labor rate variance, labor efficiency variance, idle time variance, net efficiency variance, labor usage variance. So we have two answers. Good. Fine. This is called as the idle time. How much time you have worked for? कितने time आपने work किया? And for what times hours have been paid to you? Like, I'll give you an example for this. If any one of you is working, then you might be knowing that if you are working for 8 hours or you are getting paid for 8 hours, you are getting paid for 8 hours. But tell me whether you are working for 8 hours? No. We never work for 8 hours. We work for 6 hours. Now this is not intentionally, but there is 1 hour lunch break, fine, and 1 hour also goes like that in commuting in the office. So hence effectively we work for just 6 hours. 1 hour you can consider as idle time also. I am going to consider the many questions that I can discuss, as many questions as I can in today's session. Fine. So and one more thing also, when I am teaching you the MCQs over here, I do not have just a very easy objective just to tell you the answer and move forward. I want to tell you that what all other options are also mean about. Fine, you should be knowing about it. The purpose is to just teach. Otherwise, you can just get the PDF and read for your own self. Then what is the need for me? Leave it. Next is labor rate variance. Rate variance means what? The differences in the pricing. Pricing related difference is captured in the labor rate variance. Efficiency variance sees that what is your efficiency, how much effort you have put in, and it does talks about the hours of efforts. Fine. Next is net efficiency and labor usage variance are also the similar concept. The only question of time is idle time variance. It talks about that, yes, what is your hours work and what is going to be your hours paid. Now next question we have, this is a lengthy question and tell me the answers for it. This question number 6. Let's read the question together. XYZ Limited makes a special gadget for the car it manufactures. The machine for the gadget works to full capacity and incurs 15 lakhs and 40 lakhs respectively as variable and fixed cost. This is my variable cost and this is the fixed cost. Fine. If all the gadgets were purchased from an outside supplier, the machine could be used to produce other items which would earn a total contribution of 25 lakhs. So what is the maximum price that XYZ Limited will be willing to pay the outside supplier for the gadgets, assuming that there is no change in the fixed cost? The answer for it, this question, shall I just tell the answer and move ahead without discussing any of the concept? Will that be fine? In that way, we'll be covering all the 50 questions today. So please think before you speak. Now tell me the answer for this. Now see this. This is a total easy question. I'll not just spare even 5 seconds to answer this particular question. Why? I'll tell you how. You have a machinery. Let's simplify it. You have a machinery. That machinery you are incurring variable cost 15 lakhs. to produce a product and you are incurring fixed cost of 40 lakhs, right? If you use it for one purpose, suppose if machinery is this much, now suppose I am making product A. Fine, I am making product A and this is the expenses that I have incurred. Whereas if I use this machinery for any other item, let's say product B, then I will be able to get a contribution of 25 lakhs. Contribution of 25 lakhs means over and above my costs. Over and above my cost. Fine. Now, please see this very carefully because this is a conceptual thing. So, you will take some time to understand. There is product A. There is product A in your company and there is product B. Fine. How do you find out the costing? Sales less variable cost divided by, not divided, but after deducting it, we get the contribution. Then fixed cost is deducted and finally we get the profit. I have just one machinery. Fine. I just have one machinery. Now I have the option whether I can go for producing product A or I can go for producing product B. They are saying that if you are producing next product or the another product, this gives you a contribution of 25 lakhs. Fine. So this contribution means obviously variable cost might have incurred over here. Machinery is being used for this particular product. I am not using machinery for my product A. This is giving me this particular contribution. Fine. And I have fixed cost of 40 lakh rupees to cover. Fine. I have a fixed cost of 40 lakh rupees to cover. This fixed cost should be covered from here and here. I have to earn profits. I have to earn profits and I have to cover my fixed cost from here and here. So hence this is being said. Now look at the question. They are asking you, what is the maximum price? What is the maximum price XYZ Limited will be willing to pay the outside supplier for the gadgets, right? So for the gadgets, I will be willing to pay the maximum price of 40 lakhs. This is my fixed cost. Because I have applied my machinery for the other product, okay? Now I have to cover my fixed cost. That is the cost that I am incurring. Now, if I am able to recover that cost from an outside supplier, then that is better. And that is why the simple and easy answer of this question is just the 40 lakh rupees. Is it understandable now? Have you understood it? See, anyways, I'll just give you a brief explanation as well. In order to produce the products, anyways, you were incurring 15 plus 40, that means 55 lakhs you were anyways incurring, right? Variable costs are incurred when the machinery is being run, when you have to apply the raw material, etc., all of that. Now you are not going to do this, you are just going to procure that material from someone else, from someone other. That person is going to produce the gadget for you. So just simply whatever is your total fixed cost, you say that this is the maximum price that I am going to give you. Next question is, Another name for contribution. I guess this is an easy question, conceptual question, not much there to explain. Marginal, gross profit, net income, variable income, none of the above. The another name for contribution. Okay. The another name for contribution is this. Why it is that, I'll tell you. Fine? No. So the name is marginal income. Why it is marginal income? There is a difference between gross profit and contribution. Please see this over here. Contribution means what? Contribution means sales less variable expenses. Do I consider stock in this? Do I consider stock in this? No, I do not. Fine. Whereas when I find out gross profit means what? This is sales minus cost of goods sold, and cost of goods sold means opening stock plus purchases plus any direct expense that you might be having and less closing stock. So both of these are not comparable because in this particular case we are having the impact of stock, opening and closing stock, whereas it is not my net income. It is not even, I'll not consider as variable income. Variable income means the income which keeps on changing. Not exactly, right? Might be a good answer, but we have to go for the most apt one. In the examination, you might be given the options which are very close by, right? You will get confused into those options, but you have to find the most appropriate one, and hence the most appropriate one is marginal income. Why marginal? Because whenever we are finding the contribution, we are applying the concept of marginal costing, where you want to find out that what is your margin, what is your sales minus variable cost is equals to contribution. So that is why marginal costing, we talk about contribution, and hence it is also called as the marginal income. So after when you out of your contribution, when you deduct your all of your fixed cost, you get profit. Fine, net profit. No, this is not gross, but this is net. See, the concept under marginal costing is they do not consider it. I'll tell you what. See, in our financial accounting, what we do when we are finding out the gross profit, we are deducting sales minus direct expenses. This is called as the gross profit. Fine. And out of gross profit, when you are deducting indirect expenses means which are not directly related to the production, then you achieve to the net profit. Correct? So this is financial accounting. Now what happens in costing, or let's say marginal costing, is what we are doing in marginal costing. I am deducting sales less variable cost in order to achieve at contribution, and then contribution less fixed cost. So I have included all of my cost over here. In the variable, I have divided all my cost in the variable and fixed component. And here I have divided my cost into two types, direct, indirect. That means directly related to production, indirectly related to the production. Okay? I'll try to use Hindi a little bit in between. Next question, see. The management time is saved by reporting only the deviations from the predetermined standards. It is called as management by objective, budgetary control, standard costing, management by exception, or responsibility costing. Which of the following is the correct answer? Good, Yudhishthir, Vaishali, Vinay, right. It is management by exception, and this is followed mostly, right? Suppose you have a boss and you are doing certain your activities. Now if there any problem arises in your activity, only then your boss will be apprised it of. The मतलब कभी अगर आपके काम में कोई दिक्कत आई, करेक्ट, तो तब ही आप अपने बॉस के पास जाएंगे और उनको रिपोर्ट करेंगे. जस्ट द एक्सेप्शंस, जस्ट द प्रॉब्लम्स. Fine. This is called as management by exception. What is management by objectives? So this is a concept of MBO. Under this, what you do, you set your aims and goals. You take the participation of your subordinates as well. You cumulatively decide the goals that, okay, what we want to do, how we are going to manage this. Yes, Peter Drucker. Very good, Vaishali. Next is budgetary control. Budgets, you already know about it. Standard costing, we discussed. And responsibility costing. What is the responsibility costing? Under this, what happens is that for every cost, a person is decided that yes, person A is responsible for all the production related cost. Fine. So under responsibility costing, responsibility is provided to a person. That person remains responsible for the reporting of the cost. If there is any deviation, अगर कोई problem आती है, then who is the person to ask for? That person to on whom the responsibility has been fixed. Yes, but not on a larger scale. MBO is there on a larger scale. That means there is a complete theory onto it and there are diagrams, there are things to understand. But management by exception is just a small topic that needs to be covered. Next thing, see question number 9. In a system whereby all activities are reevaluated each time a budget is formulated and starts with the assumption that requirement of funds does not exist, it is called performance program flexible zero-based production budget. Okay. Others? So the correct answer over here is this. Zero-based budgeting. Remember, I asked this particular thing from you guys in the start of this lecture. So zero-based budgeting is a concept. See what happens is, suppose, let's take an example. Let's take an example of government budget. So although the contribution for the Mahatma Gandhi NAREGA in the budget is reducing, but still, just let's take an example for it. Suppose in the last year, that means in the year 2022, the government has spent 1 lakh crores on Mahatma Gandhi NAREGA scheme. Government has spent 1 lakh crores. Now, whenever when government is making the budget for the next year, that means 2023, government is going to say that पिछले साल तो 1 लाख करोड़ खर्चा किया था, इसका मतलब this year we are going to incur 1,15,000 crore. Now please do not say that ma'am you do not know my contribution for Mahatma Gandhi NAREGA is decreasing continuously. I am aware about all of that, but I just want to give my example, so I have given this. Fine. So in the next year when the government is making budget, in the 2022 government said that fine, 1 lakh crore rupees has been spent. Next year government will say कि ठीक है इतना तो किया ही था, this much we have spent. In the next year there will be inflation, there will be more demand, and hence we are going to spend 1,15,000 crores onto Mahatma Gandhi Narega. Is this the correct practice? No, it is not. Why? Because you are not seeing that in this figure corruption is also included, inefficiencies are also included. Fine, there might be certain cases where the money has spent more than required. Fine, so inefficiency in expenditure, everything is there. Now next year you are just carrying forward all such problems. You are not finding out that if yes we have spent 1 lakh crores, are you finding out that where are the problems, why we have spent such large amount, whether this amount spent is correctly spent or not. Fine, so all these problems are solved in zero based budgeting. Zero based budgeting says that कुछ फर्क नहीं पड़ता पिछले साल आपने कितना खर्चा किया था. It does not matter how much amount you have spent in the last year. No, please consider it as a zero, and when you are giving the budget for the next year, please tell us categorically that where you are going to spend this 1,15,000 rupees. That means allocate this into parts and tell us that where you will be spending this particular amount. Fine, I hope now you have got the concept of zero based budgeting. And don't worry about the other budgets, we will be discussing about them as well. Next is question number 10. Which of the following operating measures would a manager would like to see decreasing over time? As a manager, what would you like to see decreasing over time? Again, a conceptual question, not a easy cakewalk question, but not too difficult as well. Now you have to answer this. What you will want to see decreasing? Merchandise inventory turnover, total quality cost, percentage of on-time deliveries, finished goods inventory turnover, or liquid ratio. What would you like to see decreasing? Yes, I am giving you all the options. Please wait. These are all the options: percentage of all on-time deliveries, finished goods inventory turnover, liquid ratios. Fine. And then merchandise inventory turnover, total quality cost. What we would like to see decreasing? None of you have answered it correctly. See, this is why I told you this is a easy but conceptual question. Fine. See over here. You want to see decreasing. Now inventory turnover. Inventory turnover means formula क्या होता है inventory turnover का? This is COGS upon average inventory. Fine. And I want this to increase. Fine. I want my inventory levels to be on lower side. Why? एक बात बताओ, कोई भी इंसान ये चाहता है क्या कि उसका स्टॉक पड़ा रहे? नहीं ना. We want that our stock should be limited and production should be high. Now tell me which situation is correct. In the year I have spent 10 lakh rupees in order to produce, and my inventory with me is 1 lakh rupees. That means turnover is inventory turnover 10. This is situation 1. In situation 2, I have spent 10 lakh rupees in the production and inventory in my hand is 5 lakh rupees. That means my inventory turnover is 2. Tell me which situation is good, situation number 1 or situation number 2? Situation number 1 is good or situation number 2 is good? Situation number 1 में आपका inventory turnover 10 है और situation number 2 में आपका inventory turnover 2 है. No, you guys are not understanding my point. अब बिल्कुल ध्यान से जो मैं कहना चाहती हूँ वो सुनो, ठीक है? इस साल मैंने प्रोडक्शन में 10 लाख रुपए खर्चा किए हैं, ठीक है? अच्छी बात क्या होगी कि साल के एंड में मेरे पास सिर्फ 1 लाख का स्टॉक बचे या 5 लाख का स्टॉक मेरे गोडाउन में पड़ा सड़ता रहे? Now translating it into English, all those people who might not understand it, in this year I have done a production of 10 lakh rupees. There are two situations in front of me. At the end of the year, I am having just 1 lakh rupees of stock in my hand, or I am having 5 lakh rupees of stock in my hand. Which situation I want? As a business woman, I do not want my stock to rot in my godown. No, I want that my production should be high, correct? My cost of goods sold should be high, my production should be high, but my inventory should be less, because I do not want to keep the inventory in my godown. I want to sell it. Okay, understood my point? So that is why I want to increase my turnover ratio, correct? So merchandise inventory turnover, I want to increase it. Similarly, finished goods inventory turnover, I want to increase that as well. I do not want my finished goods to lie in my godown. I want the production should be higher, but inventory levels should be lower. Now talking about the other points as well. Percentage of on-time delivery. Yes, I want to deliver on time. I want to increase this. This should be increasing. Fine. Liquid ratio should also be increased. It is better that I have, liquid ratio means what? Liquid ratio means liquid assets divided by your current liabilities. That means आपके पास कितना cash है as compared to your current liability. I want it to be more. Who doesn't want to have more cash in comparison to the current liabilities? Fine. Now when I want to see all of them increasing, now the one thing that remains with me is total quality cost. Total quality cost means if you are producing defective quality of products, fine, so you have to incur more quality checking, more quality inspections, etc., etc. I do not want that. I want that my production should be so good that I do not have to spend on more on the quality checking. And obviously this is a cost. Who wants cost to increase? Even if you do not understand the concept, it is super easy that you do not want your cost to increase. So hence this needs to be decreased. Now I have a thing for you guys, although today's session is over, but I want to tell you that my objective is not just to tell you the MCQ and the answer and just go ahead. I also want to discuss each of the MCQ thoroughly, and I also want to give you the concepts behind it. So all those people who want to finish this as soon as possible, they can get the PDF in the paid course and they can just go with it. And all those people who are patient just like me, then please wait with me and till the time that we complete all our 50 questions. Fine. And I'm very sure that once you will be completing these 50 questions, you will have 5 times more basic concepts knowledge. Okay. So with that, thank you so much for joining in with me. I hope you did like this series. And if you did, then please do not forget to like this video. Thank you so much.